Good morning, guys. Bonus edition of me. Welcome to the most underrated show on YouTube. Let's do it. All right, good morning, everyone. So I wasn't supposed to be here. I'll tell you a story. So we decided Paul and myself and Mary, our property manager, we were flying down to Turks and Caicos yesterday. So the day before, we go and get our COVID test, and we're all negative. Then we decided to go to the airport yesterday morning. We get to the airport and we're checking in, and the lady at the counter says, "Okay, you need to fill out this form to go to Turks and Caicos." Okay, no problem. So we start we start doing the form, and it just gets into all this convoluted stuff. And all of a sudden, so we have to submit something to the country of Turks and Caicos. So we submit our forms. 2 minutes later, we get an email back that says, "You guys took an antigen test, COVID test. We need the PCR test. So if you fly here, you can't come in." Okay. So we leave the airport, and here we are. So we are going next Wednesday through Friday. So next Wednesday through Friday, I won't be here. Actually, I'm only doing one show next week. Seth is going to fill in for me on Monday. He's going to do his Little Book stocks. I will not be here Monday. Tuesday, I will be here. I'll do the show. And then Wednesday through Friday, I won't be here. And then we'll get back to normal after that. But yeah, I didn't really know that you needed to do this PCR stuff and antigen and who knows. Anyways, let's get to it. Classic is right. That's the first time something has ever happened to me like that, but whatever. You live and you learn. So the first thing that I wanted to start with, before we get into news, a lot of the chat was going on about employment numbers and this and that before the show started here in the YouTube chat. So there's somebody that said they're working at McDonald's, they're doing $13 an hour. There's somebody that said that they're hiring people at golf courses and they're just stealing things and not showing up. So the thing that I wanted to take a look at was the transport. So I always like to look at what the transports are doing. And these are the people that are basically moving stuff around the country. Obviously, when COVID happened, around the country and the world. Obviously, when COVID happened, this happened. Then everybody needed stuff, so it flew right back up. And we haven't seen a drop like this since January, September-ish, June-ish, and then, of course, COVID. So right now, we're getting this big pullback in the transport. So transports are something that lead markets and kind of give you a little bit of foreshadowing going into what's happening. Let me look at materials. I think this is retail. What is this? Wiltshire, XLK, Tech, XLU. Just let me find materials real quick. Energy. Because materials also give you, here we go, XLB. And I haven't looked at it this morning, but you're getting a pullback like that. So materials are, if there are materials and they can't be transported, you typically see these things go with one another. So just keep an eye on the markets. I always say banks lead markets, transports, materials. You got to keep an eye on those as well. And that's just a little tip that I use to see where markets are going. Trucking, here we go. Evan, he says, trucking also has labor shortages that they are trying to recover from. But it's slow. For sure it's slow. So, all right, here we go. Let's do some news. Well, let's first look at the markets, then we'll do some news. Then we'll do some wins and losses. And Nike, geez, oh man. Nike's soaring this morning. I think Nike's up like 13% or something. 14% right now. Now, if you're in Nike, please, if you're in Nike and you were trading it for whatever reason, please take your profits, because this thing, it closed at $130. It's going to open up. I can't even zoom out enough. It's going to open up here this morning. So if you get something that pole vaults up to here, please take your profits and because this thing is going to pull back down. It might not come back down to here, but it's definitely going to pull back to the 140s. So consider yourself lucky, take your profits, and you will be able to put some money in your pocket. Speaking of putting money in your pocket, I had a patron message me this morning. Let me just read what it says. This was like one of the craziest texts I've ever seen. All right, it says, in the last 5 weeks, Each week, I've made the same amount that I make in 1 month's salary at my day job. In May, in one day, day trading, AMC, I made in one day the same amount of my entire monthly salary. So when I start going through and reading these other wins and losses that we've had from some people, guys, this stuff works. Follow the rules, and I promise you it works. So for the person that asked if they should join the Bid and Ask Nation, I think I just gave you your answer. Somebody asked that earlier in the chat. So, all right, let's get to the news. What are the markets doing real quick? Dow's up 0.5%. S&P and NASDAQ are pretty much flat. So where do I want to go first? I don't even remember. Well, let's start with Nike. So Nike shares, according to analysts, could surge another 50% after monster earnings. I'm just looking at their numbers of their shoe sales and their athletic sales and whatnot. Sales surged 141% from last year in their Jesus, and 29% compared to the fourth quarter of 2019. Digital sales soared 140% from the fourth quarter of 2019. China sales increased 34% in equipment sales. Jordan brand increased 31%. Man, this company is just really something. Nike stock jumped 13% to $149.50 a share in pre-market trading. Investors also rejoice over Nike's upbeat full-year outlook. The company says it sees sales surpassing $50 billion for the first time, gross profit margins gaining in the range of 125 to 150 basis points. That is epic. Spicer, I do not disagree with you. He said Nike shoes are made for those with small feet or narrow feet. Not small, narrow feet. I do agree with you. Their shoes have a reputation for being a little bit tight. All right, we're in the second home recovery, and okay, so this story, it really doesn't have to do with the home recovery. It has to do with, well, I guess it does a little bit with vacations, but it has to do with what Yelp is saying and where they're seeing recoveries happening. So on Wednesday, Yelp published data tracking consumer interest across the platform and found a near complete recovery relative to 2019 levels that has been made in several categories across different regions. In some states and metro areas, the economy is doing significantly better than the pandemic. Notably, many of these metro areas are also popular vacation spots where many urban dwellers have decamped. The most recovered cities since the spring of 19 include Kill Devil Hills, North Carolina, never heard of it, 138%. Jackson, Wyoming, heard of that. That's where the Fed's doing their meeting in August. Vineyard Haven, Massachusetts, up 113%. St. George, Utah, 137%. So that's pretty great. Among the least recovered cities are more populous metros: New York City, New Orleans, Minneapolis, and St. Paul, Minnesota, San Francisco, and Oakland. Let's see. Other vacation-heavy spots have flagged by Yelp are rebounding more strongly during the pandemic: Jersey Shore, Napa Valley, Key West, South Padre Island off the South Texas coast of the Gulf of Mexico. So, moral of the story, it seems like people are traveling more, and they're certainly going out to restaurants more, because if they're searching things in Yelp, that's what Yelp is good for. So I've never been to St. George, Utah. I've never been to Utah, period. But I hear it's a beautiful state. Okay, some of your guys' comments are just so ridiculous. Let's just stick with the homes. So KB Home says, demand is great. Why is the stock falling? KB Homes, of course, KB Homes is a builder, and they have the reputation for, I'm sure they do build custom homes here and there, but they have the reputation of doing the cookie cutter homes. That's what I call them, like the Ryan Homes and the KB and the Pulte and this and that. KB Home says demand for new houses stayed healthy throughout the second quarter. Stocks fell, the shares fell. That's not my point. The dynamic of low supply and high demand for housing has contributed to rising prices for both existing and new homes. Okay, so that's good. I guess we're seeing that. I'm off to St. George in August. Nice, Seth. All right. This is what I wanted to look at. Their revenue, I wanted to compare what their revenue was doing. Wednesday evening, the company reported second quarter diluted earnings of $1.50 per share, while analysts were expecting $1.33. Revenue was $1.44 billion, less than $1.48 billion that Wall Street had penciled in, making it the second quarter in a row that revenue was lower than expected. Sweet. On the call, KB Home said it had anticipated third quarter revenue in the range of $1.5 to $1.58 billion. Current sales activity is apparently less frantic than earlier this year, but management is still limiting the sales and raising prices to keep orders from outstripping the construction capacity. So the good news is, even though we're seeing the housing numbers going crazy, prices of homes are going up. You know, it's funny. My parents bought a home in Florida in one of these kind of cookie cutter neighborhoods in Orlando. And it went from having, when they bought the house, to what you would buy it at now, it's $60,000 more to start that house nowadays. So even though home prices are climbing like that, if people are still buying them, that's good. People still have, people did save a lot of money in their pockets during the pandemic. So that's great. As we are releasing lots for sale today at higher prices per phase release, we're not seeing a tapering in demand. Okay. It may be a little off from a bit of strength in March, but March, it was also ridiculously strong and maybe a different level. So millennials don't want that KB crap. I beg to differ with you, Eric. What millennials seem to want is exactly KB kind of deals where they can go and build a brand new home. Because it seems like a lot less people are interested in renovating. So, and they get to move into these neighborhoods. Man, when I go to these neighborhoods, it's all it is people that are, all it is are millennials in these neighborhoods, because they can all live by each other and hang out and drink rosé all day with each other. Why Eli Lilly stock is up by 8%. All right. So with the ruling that the FDA made on Biogen 2 weeks ago now, they've set a new precedent for their approval of drugs, and especially in the realm of Alzheimer's. It was the first drug being approved in 20 some years. 23 years? That was the first Alzheimer's drug that was approved. So they've definitely set a new precedent. Good or bad, it's going to send a lot of volatility into the pharma space. So this is what you're just going to have to deal with. So day traders, Eli Lilly's one to for sure keep an eye on. Shares of Eli Lilly gained upside momentum after the company revealed that its drug treatment for Alzheimer's, donanemab, received FDA's breakthrough therapy designation. Okay, no surprise. Recently, the FDA approved Biogen's aducanumab, sending its shares from $280 to $460. Currently, Biogen is sitting at $350 a share. So what's next for Eli Lilly? I personally think that you're just going to see this chaos. Every single approval from phases 1, 2, through 3, through 4, whatever you want to define it as, it's going to be extreme chaos in the market. So you're going to see the same big gaps that you saw on Biogen charts. I think you're going to start seeing that on Eli Lilly's charts. Traders should not expect a market reaction similar to what we've seen with the Biogen. I do not agree with you. Wait, I'd also like to note Eli's Lilly market cap exceeds $200 billion and it produces many drugs. Biogen also produces many drugs, and I would love to compare pipelines, but I'm not going to. But what is Biogen? $75 billion company, $50 billion. Okay, so I disagree with what he's saying. You're still going to see the movement of these massive gaps. At the same time, treatment for Alzheimer's will likely grow into strong stock market segment due to the severity of the disease and the fact that the number of patients with Alzheimer's is expected to grow at a fast pace. Prediction, and this is going to happen. There are going to be tons of these small companies, like I'm just going to use the example of Ocugen and Clove, these kind of things. They're going to start coming out with Alzheimer's research, Alzheimer's drugs, what have you. And the hype dorks are going to fly after this stuff. And Alzheimer's is going to be the new thing. Mark my words. Absolutely mark my words. That's all I got to say about that. Boom. All right. What's next? Archegos. You guys remember Archegos? So this was, if you don't remember Archegos or if you need a refresher, this is the family office, gave a bad rap to the name of family offices, / fund that got margin called for about, what was it, $50 billion or something. They couldn't pay what they needed to pay. I think it was maybe it was 30 billion. Doesn't matter. It was a ton of money. And the market got shooken up, especially for those of you or others that were in Viacom, Baidu, and Discovery. So they're taking a look at this and they're saying that there was nothing illegal that was happening. It was just a fall in the system, and they need to, of course, they need to put on more regulation so this doesn't happen again. So U.S. investigators who focus on corporate collusion are examining how global markets handled the multi-billion-dollar trades with Archegos Capital Management that sent stocks into a spiral and burned other shareholders. The Justice Department Antitrust Division is handling at least part of the probe into the collapse of Bill Wang's firm after lenders rushed to liquidate souring positions in March, according to people familiar with the matter. The debacle also erased a lot of the billionaires' fortunes and saddled the banks with more than $10 billion in losses. So, I do agree with you, long shot. Technically not illegal, highly unethical. The fact that this impacted the banks as bad as it did, yeah, the regulation is for sure going to come. The division has been seeking information from Wang's biggest backers on Wall Street, who discussed the possibility of moving in concert to unwind the portfolio, sever ties with the busted family office, people said, asking not to be identified, blah, blah, blah. In other months, Archegos' downfall, authorities haven't accused the family office and banks of breaking any laws, but the episode has attracted criticism from regulators. So they were unable to meet their margin calls. And if you look at this, Viacom is down 58% from its high in March. Discovery down 62%. Those were incredible falls. Morgan Stanley had a key role in the blowup. It was the firm leading the fundraising for Viacom, and then later in the week was among the first to start dumping the shares of Archegos, and they reasoned that they needed to meet underwriting obligations first, so it started selling the shares of Archegos. Just absolutely epic. So, all right. Last one, the stress test. If there's anybody that I trust doing the stress test on themselves, it's the Fed. The Federal Reserve on Thursday announced that temporary limits on dividend payments and share buybacks of the nation's largest banks can end after June 30th, after the results of the latest stress test showed that the firms have enough capital to withstand a severe global recession. Beautiful. The Fed has put restrictions on bank payouts during the pandemic in an effort to conserve capital. Yeah. They not only did they do it now, they also did it going back to, they started doing this and whatnot in 2008. So, after the financial collapse, that's when they started putting in liquidity obligations for the different banks. So the stress tests are designed to hit the banks with hard shock to test what happens, see what happens to their capital. This year, all the banks individually stayed within their minimum capital levels. The Fed said that it expects the bank announcement to be at 4:30 on Monday, June 28th. So even though this is all coming out now, you're probably going to see a reaction on Tuesday, Wednesday, what have you, going into the 4th of July weekend. So this is pretty incredible. The Fed said in March that it was prepared to end temporary limits on dividend payments and share buybacks, subject to the completion of the annual stress test. So, all right. That's that for that. I don't know. I just don't know anymore. There's just, I don't know. Whatever. All right. So I'm going to do some wins and losses, guys. And then I'm going to run through a couple stocks for you guys, and we'll go from there. So in the Employed Trader series, and if you are in the Bid and Ask Nation, you can participate in the Employed Trader series. Maybe that's why you joined. I don't know. So we took a short on Caterpillar. Let me pull up Caterpillar and just show you what happened. Caterpillar was looking like a fantastic short until, of course, all the news started coming in about the infrastructure bill, and that was just bad timing. But it is what it is. We made a couple percentage points, but we're gonna go long on this bad boy eventually. So in the midst of this fall, my most important thing is that I wanted to drop through the 100-day moving average, and we absolutely did that. We added in somewhere, I can't remember exactly what day, somewhere in this range. It was either here or here, but we got a good little short run on it, made 1 or 2%, and then we had this drastic snapback that started to happen, even with this incredible downtrend. So I do foresee, after seeing this big green volume day yesterday, I do foresee this thing churning up, and eventually the red line will move into the sweet spot, and we'll be able to go long on this, and this will probably go back to its previous high of 248, something in that regard. So this is a win is a win. I mean, a couple percent. We were only in it for a couple days, 5 days, so I'll take it. Absolutely not ideal. I was really thinking that I do think without this infrastructure bill, this thing would have made a play down to the 200-day moving average, and then depending on what the big hedge funds and money managers were going to do, this thing could have kept falling. But this is another one where it kind of gives you a little bit of foreshadowing into what's going to happen in markets. That's why I chose Caterpillar as one of the stocks in the Employed Trader, because it kind of gives you, it's kind of in that, it's in the construction, but it goes along with the transports, the materials. It's these kind of positions and these kind of ETFs and these kind of stocks that give you the little bit of foreshadowing of what's going to happen. This thing completely changed on us, so it is what it is. Wilding, my man, ENPH, 4.25% on a swing trade. J's brand new. QD, plus 12.5% on a swing trade. This is a good one. See, I like the losses the most. I like the losses the most if people tell me why they lost, and this person did. He lost 5% on a swing trade on Pinterest. He entered too early and the volume was too low. As long as you understand why you're losing, I'm happy with it. This is an interesting one. The HVAC man. He's fairly new. He traded gold futures. So he used my methods of charting. So it's interesting to see. I always say that you can go on any chart and do whatever you want, and the patterns are going to be the same. But he went on. Over to futures, and he made 10% on a swing trade over there. So that's pretty epic. Who knew? Plus 4% on a swing trade on Now. Paid for their Bid and Ask Nation membership. Awesome. Nidge, Roku, plus 14%. Chris, plus 10% on Square. 8.25% on Microsoft. Here we go. Here's Caesar with his day trades. PayPal, plus 8%, plus 9%. Microsoft, plus 7%. Bank of America, plus 7.5%. Triple D, plus 9%. Smith & Wesson, plus 3%, plus 13%. So you guys can see that people are definitely making a lot of money in the Bid and Ask Nation. Tons of people are paying for their entire memberships of it. And like I said, that one person that messaged me this morning, he said that he's making his monthly salary every single week. Come on. I'll do EBIX. All right. Okay, so EBIX. All right. So the good news about EBIX is we need to fill this gap. The bad news about EBIX is you have very strong resistance right here. The other bad news about EBIX is for the past 10 days or so, you've had pretty low volume. Now, let me zoom out just a touch over here because I want to see what we can do. So this one is actually, I think, better to approach from a swing trading perspective. And it's because you've broken over this resistance, you've broken over these moving averages. I think that if we can just get some upward movement like so, you'll be able to do that. Maybe you turn it into a long-term trade. But right now, on this long-term chart, I don't like where the stochastic is at. And that is my reasoning over there. Let me reset this. What do we got on this stochastic? So this stochastic is a little bit high also, but I think you're going to be okay. If you want to do a swing trade on this, it's better to do it that way than long-term right now. Let's see. So this morning when I asked for wins and losses, I said wine and losses. So I have Beaker in here telling me he wants Cabernet Sauvignon because that's it. Spicer, here's Whole Foods. Or nope, not Whole Foods, Sprouts Foods. Whole Foods doesn't exist anymore. As its own public entity, sole entity. Got bought by Amazon many years ago. All right. This is a great looking short, Spicer. I really like what's happening here. You broke through both of these moving averages. You're going to have a good run down to the 100-day. This is looking really good. You're going to face that support, which is down at this level. Yep, and that's basically the 100-day moving average. So if you can definitely short this down to the 100-day or sell puts on it or whatever you want to do. I know you do a lot of things from value perspective. So what watch is on my wrist? I'm actually not wearing a watch today because I'm going to play golf after this, and I don't play golf with a watch on. I do own a Tissot. My brother gave it to me many, many, many years ago. All right. Peloton. We can do Peloton. Dun, 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 dun. Watches right now are insane. That's all I know. The watches are nuts. For some of you watch people out there, like I got a Rolex in 2018, and the thing, yeah, I paid $8 for it. Right now, somebody offered me $11 used. This market is insane. It's just this watch market is as insane as the car market. It's I have a friend. I've told the story on the show before. I have a friend. He had a Denali pickup truck. 2500 HD, I think it's called. He paid $72 for it, put 24,000 miles on it between 2020 and in a year, basically. He went to the dealership the other day to get an oil change. They gave him $70,000 for that truck. That same truck that he put 24,000 miles on. Just nuts. All right, Peloton. Okay, Peloton finally broke through its 200-day moving average, and it actually closed up here last night. Well, I'll be damned. And there's some pretty decent volume coming into this. So the only thing I don't like is it's really high on its stochastic, and it's coming to this resistance level. So that could tell me that if it gets here, maybe this thing is going to start turning down on you. Maybe this red line will start turning down on you also. So that's my only concern right now. But keep a watch on it, and if you get a good pattern, go for it. But just be very cautious with this one. AZO, isn't that the car place? Yeah, AutoZone. I remember looking at AutoZone from a value perspective. Where was I looking at it? I don't remember what price I was looking, but actually it was probably around this price, right around here. And you can see your head and shoulders pattern, head here, shoulders, shoulders, and you have another head and shoulders in here. So sitting right at that 50-day moving average. Good volume, though. Good consistent volume coming up through the sweet spot. Yep, keep a watch on this thing. Right when the thing breaks into the sweet spot, get at it. You'll like it. All right. Somebody else asked me for one CELH. Isn't that a newer company? Or am I wrong here? New-ish. Okay, we're good. Let's see. Actually, right now it's technically a short because you have a downtrend, but it's snapping back. I actually really like it over here. Your volume is not that great, but you're right in the sweet spot. Your moving averages. If you can just break out through this resistance point, I think you'll get a nice run up to this $83 area for a little swing trade. That's a pretty nice one. So give me let me write this down actually. CELH swing. ELH swing. Yes. So, guys, Tuesday next week, we're going to announce the winner of the Tesla. So, join us on Tuesday at 1 o'clock on the live show to hear who won the Tesla. Stephanie, thoughts on Nike closing the gap with 14% gain after earnings? Stephanie, if I'm you, I'm taking profits on that thing, and just consider yourself lucky because it's for sure going to pull back. If you want to join the Patreon, guys, there's another Tesla coming at 100,000 subscribers. The longer you're in, the more entries you get. Here's the Minions, $24 a month. This price is going up on July 1st. Bid and Ask Nation. This is my tier. This is with all the trading, Discord access. You get Discord access over here too, but this one's a lot more exclusive. And this price is going up as well. But guys, any subscription to the Patreon will get you entered in to win the Tesla. And if you want to do real estate deal with Paul, if you're buying a piece of real estate, it's probably worth that $10,000 consult because he really understands it. So, all right, guys. And the after hours chat in the Bid and Ask Nation is pretty awesome too. So that's it for today. I will see you guys on Tuesday. I won't be here on Monday. Seth will be here on Monday. Seth is going to do his little book that beats the market portfolio. He's going to exit all of his positions from this past year, enter all of the new positions for this next year coming up, and you guys will get a walkthrough on doing that. So we talk about the little book that beats the market a lot on the show. It's the value portfolio. You're going to see how Seth does it, and it's going to be really great. That's a great idea, Seth, and let's keep it going. So you guys have a wonderful weekend. I will see you on Tuesday. Peace.